What's up, everyone? I hope you guys are having an amazing day. Today, we are going to be going over my dividend stock portfolio on Robinhood. Before this video starts, I just want to say a big thank you to all you guys that tuned in for the last video. We got a lot of new people, lots of positive feedback on the video, which I was not expecting that much of. A ton of you guys and girls are embarking on a similar journey of dividend investing, which is great to see, because we are already starting to grow that community of people that want to join on this journey that I have in store for this channel, which is ultimately financial freedom. Now, dividend investing is a great way of passive income because it's basically you investing into the stock market, and depending on which stocks you invest in, the company will pay out a dividend because it's basically them having a surplus amount of earnings that they want to thank their investors or shareholders for investing in their company. So they pay it out, whether it be monthly, quarterly, semi-annually, or annually, and you literally don't have to do a thing, which is why it's passive income. You're making money in your sleep. Dividend investing can go hand in hand with capital gains, which is the stock of that company growing over time, which is what I'm also interested in. Now it is not required. You will always earn dividends from reliable companies that have a good payout ratio, whether the market is going up, down, or sideways. But I personally like to invest in stocks for companies that are innovative or have something promising for themselves for the future in general. Also, if you haven't made a Robinhood account or a brokerage account in general, I highly recommend you do it right away and start investing from today. You can use either one of my referral links in the description. One is for Robinhood, one is for Webull. You can open an account for both, and we will both get free stocks from either of those two brokerage accounts. And I will open the stocks on the video, and if it is not a dividend stock, then I will reinvest that money into a dividend stock. So it's a win-win. Now, without further ado, let us take a look at this portfolio. Okay, so currently my portfolio is partially recovering from the news that was made on Tuesday about Trump talking about how the trade deal would probably not be made until after the 2020 election. And in fact, he said that he's not setting a deadline for that. And as expected, the stocks tumbled because a lot of noise traders and investors got scared for whatever reason and decided to pull their money out of the stocks. Not sure why, but that's just how it is. But don't be like the noise traders. When this stuff happens, hold your stocks, and I'll explain why in a future video. So currently we are at 1111, make a wish, $1,111.78. We are up just $2 today. Again, recovering. And in the after hours, we're down 16 cents. And see, we have been going back up. If we go to the week, I believe this is where Trump made the news, and it was just a sharp decline. We are all the way up here at 1,121, but it is what it is. It will recover, and we are down $8.69 as a result. In the month, we are down 15 cents. 3 months, we're down $27, and in the year, or the all, doesn't make a difference because I started in August, we are down $29.05. Now, I alluded to this in my previous video about how I went from trading the cheap stocks and making minimal gains, and then I found out about day trading. I had some success with it, but then I made a huge mistake in terms of selecting a stock, put about $80 worth of shares into that stock, and it went down $30 in a matter of hours, and I was down here. But lately, we've been trying to recover from that, and hopefully one day we will be able to beat this over here and be profitable all time. You can see there's been a little whiplash here because of the trade war. The news, good news, bad news, pushes it up and down respectively because of all the noise traders. And here we have about 10 stocks I'm investing in, only 1 to 2 shares for each of them because I just started. And this is like the amount that I want to keep, maybe like 10 to 15. And among those 10 to 15 stocks from different companies, I'll continue to average down or dollar cost average, which is buying more shares with the price when it goes down, so that the average price that I have invested in that particular stock, so that I can actually start to make gains, even though the price has been going down. So let's start with the most well-known blue chips, which is Apple. Apple is a no-brainer. Today it was up $3. In the week it was down $1, and in the month it's up $8, and so on and so forth. 51, 93, 5 years just going up. If you bought it at 2015 when it was only worth 90 something dollars, you are winning right now. Like, you are amazing. We have one share and my total return is $7.85. The 52-week high was hit recently at $268. I think it was like 2 weeks ago. And it's been continuously hitting its 52-week high for like over the past couple of months. The dividend yield is 1.371%. It actually paid me a dividend November 14th, so a couple of weeks ago, and it was 77 cents. So I highly recommend you guys invest in Apple. I don't think it's too late to invest in Apple because you can see on the 5-year that it has continuously been going up. But I would wait for a pullback. This was a huge pullback right here. I wouldn't wait for something this big, but no, any good pullback will help you save money and gain more. All right, so moving on to the next stock, we have Microsoft, which is currently sitting at $149.93. Again, today it was just continuous consolidation, so it just barely became profitable by the end of the day, and it made 8 cents today. But overall, my total return is $2.72. Again, just one share because I need to earn more money to reinvest. It also hit its 52-week high recently, 152.50. Its dividend yield similar kind of to Apple's, 1.374%. Now, I haven't got my dividend yet. The dividend will actually be coming next week, Thursday, on December 12th. Microsoft and Apple didn't really do that much research because I feel like they're a go-to in terms of investing because they have continuously been going up and up and up, just growing because their products, the Apple iPhone, AirPods, Microsoft Office, Microsoft Windows, and what these two respective companies have in store for themselves make them great assets. Our third stock is Disney. Now, the reason why I invested in Disney was because they released Disney Plus, as you may or may not know, and in the first day they got 10 million users. Now, when you hear news like this is a great buy signal for investors. Unfortunately, I was a little late to the party because I didn't have enough buying power at the time, so I got it like towards the end, and I would have just laid off Disney so that my fear of missing out, which is like buying a stock when it's reached its top for its particular period of time. But then some investor said that there would be more. He predicted there would be more upside for Disney, even though it made like $10 in the same day that it made the announcement. And it is going to be competing with Hulu, Roku, and Netflix, which is another huge buying opportunity because, you know, competition is one thing that can drive up or down the price depending on which company seems to have the upper hand in the eyes of the investors or the general public. We got one share. My total return is negative 63 cents, partly because of the trade news. To the 52-week high, again because of Disney Plus, $153.41. Similar 1%er in the dividend yield. I do not see when the dividend should be scheduled, but if we go onto this website called Seeking Alpha, let us search for the simple Disney. And let's see when we'll be receiving stock. In the desktop version, it should be more straightforward. But for this, it doesn't show a lot, at least from what I see. But if we scroll across here to dividend news, we see Walt Disney declares an 88-cent dividend. And they declared this yesterday actually, and December 16th. So I guess I should be receiving that on the 16th. But yes, highly recommend you use Seeking Alpha, guys. It's a great way. Seeking Alpha or dividend.com. Those are two pretty good ones for tracking the dividends of companies that you're interested in. Next, we have AT&T. Now, AT&T, I've heard, is a great dividend stock. So I'm definitely going to be averaging down on AT&T whenever the price goes down. I have one share, but like I said, I'm definitely gonna buy more. We made some gains today, and the total return is $1.19, which is actually 3%. The dividend yield is 7%, 7.043 to be exact. Are we scheduled for any dividends? No, but we can go back to Seeking Alpha and type in T and see when we will be getting our dividend, or when we are expected to get our dividend. So they declared a 51-cent dividend all the way back in September, and let's see when. Payable November 1st. So I actually missed it, unfortunately, because I invested in AT&T after November 1st. For shareholders of record, October 10th, and ex-div, October 9th. Okay. Wait for AT&T to go down, maybe to around, I guess, $36, maybe $37, and that would be a great time to buy a couple of shares. All right, next we have Wells Fargo, and we're diversifying the portfolio in the different sectors. This time it's a financial sector, and you know, everyone knows Wells Fargo. It is a bank, and I currently have 2 shares of Wells Fargo. We made some returns. We are up $1.24. Today it, you know, didn't do bad, but it could have been way better. It went down 1 cent today. The dividend yield is 3.559%. Now, let's see if it is a scheduled dividend. Okay, let's go back to Seeking Alpha and let us type in WFC. All right, so all the way back in July, they declared a 51-cent dividend, and in November 6th, they declared an ex-dividend for November 7th because. So they declared a 51-cent dividend, payable September 1st, August 9th, or August 8th. But let me just show you guys something interesting with the dividends for Wells Fargo. Let's see. You know what? I'm just going to enable the desktop site so that I can show you guys, because this is interesting. All right, I know this is going to look sloppy. I do apologize. We go to dividends, we go to the dividends tab, and if we go to, is it dividend growth? It is dividend growth. We extend this slider. This is so hard on mobile. Or we can just zoom out like this, I suppose. But you notice right here this huge dip. And if you zoom in, you can see that's between 29 and 2010. That was when the recession happened, so they had to cut their dividends, but it has still been going up since then. But I think it would be much higher if it weren't for the recession, because it basically had to go back to square one. But it has still been growing over time, so that's why. So I still have my faith in Wells Fargo. If anything, I will just invest in Capital One or Discover. And the reasons why I choose Capital One and Discover as a replacement or an addition for the financial sector investment is because those are 2 financial businesses that I am involved in. I have a few bank accounts with Capital One, and I'm getting a credit card from Discover. Now, a tip that I got from a couple of friends of mine is look at companies that you are already familiar with that are also promising. You can do some research. My phone's about to die. Next up, we have AbbVie. This is another one of those stocks that tons of the YouTubers that I watch who are dividend investors say is a great stock to invest in. It is a part of the healthcare sector, and they, according to Robinhood, engage in the development and sale of pharmaceutical products. So, pharmacy products. Currently have 1 share. Total return is 27 cents. It went down today by 48 cents. So, I could average down on this if I have enough buying power. Their dividend yield is 4.285%. So you guys can do the math. 4% of about $86 and see how much the dividend is per share. The 52-week high was all the way at $92. So hopefully it can go back to that and beat the 52-week high. once more. That is the dream. By then, I will definitely have multiple shares of this. Next, we have Altria. Now, unfortunately, Altria is one of those stocks for a company that's a little in the products that they sell. In this case, they manufacture and sell cigarettes in the United States, and they operate through several different segments, which it states here. But it's currently at $50.29, and if we look at these, it has been going up. In the year, it has been down $4 though. Once again, great buying opportunity. Would have been right here only just a few months ago. It's only worth $39. In 5 year, it is up only 16 cents. So actually, if we take a look here, this is a great buying opportunity because it was all the way up at 74 cents right here at the pinnacle, and then it went down. One share, we've made 17 cents in total, and the dividend yield is 6%. All right, now we have our ETF, which I'm invested in. After looking at quite a few of them, I decided to invest in SPHD, which is the ETF for the S&P 500, high dividend, and it's low volatility. So on the day today, it made 4 cents. It's down 21 cents, down 45 cents, up $1.59, up $2.29, and in 5 years, up $10. Now, with the purpose of these dividend ETFs, it's not really about growth, but growth is nice. We've made 50 cents so far. It is more about the dividend. So we have a 4.699, or basically 4.7 dividend yield for this. And I've bought and sold it a few times. Last time I had 2 shares, but I sold one of the shares. Really wish I'd kept that second share because it should be recovering soon. I believe this, yes, that is when the trade news occurred. So this would have been a great time to buy back that second share. But yeah, SPHD is a great dividend stock. There's a few others that I can recommend in the future, but I don't have them known off the top of my head, so I do apologize. All right, we're winding down. Now we have our REITs. We have O, which is Realty Income. Realty Income basically invests in mortgage, I believe. Let's just pull it up here. Okay, so monthly cash dividends for Realty Income Corp. It's a real estate company, and it generates dependable monthly cash dividends from a consistent and predictable level of cash flow from operations. So you invest in REITs because they have dividends that are higher, that are usually supposed to be higher than stocks and other things like that. So this one is 4.186%, which is pretty good. Anything past 2% is really good. That's general rule of thumb. And currently it's at $75.68. You invest in a REIT also with the hope of it going up over time, but it's kind of more about the dividend. So right now, I don't think it's a really good buying opportunity. So I would wait for the price to go lower. I'm basing that off of the 5-year chart. Well, if you base it off of the month, I guess this could be a great buying opportunity, or to dollar cost average. Last but not least, we have AGNC Investment. Now, this is the latest addition to the group. I love me my REITs, man, for the dividends. And we got 2 shares of this. The average cost is $17.26. Total return is -9 cents. The dividend yield is 12.315%. Wow. Let's look at the week. Down 4 cents, up 18 cents, up $2 in the 3-month, down 45 cents in the year, and down $5.82. See, so like I was saying about REITs, not really that risky, but you should still do your research on what the company wants to do, or like what it has in store for itself, as I was saying in the last video. And you can see that from the day to the 3 month, I guess you could say, that the change in growth is not really that much. Of course, in the 5 year, it's kind of a decent amount, but it's only $17. So I guess this is a great time to buy it. In Q3, it actually beat its expectations by a decent amount, just like by 0.10 in the earnings per share. And AGNC Investment Corp is a real estate investment trust, and it invests in agency residential mortgage-backed securities on a leveraged basis. It has a monthly dividend and is expected to be paid out on December 10th. Well, there you have it, guys and gals. That is my dividend portfolio. Definitely looking forward to making improvements on it, investing multiple shares into these companies, and rearranging it and reorganizing it in the future. If you guys were inspired or enjoyed the video in general, please do leave a like. If you didn't enjoy it or you disliked it, please leave a dislike, but also leave some feedback and what I can do to be better in the future. And don't forget to use my referral codes in the description. Subscribe if you're new, and I will catch you guys later in the next video. Talk to you guys then. Peace.